and welcome to a Foyston, Gordon, and Payne webinar that we are especially excited to share with you. My name is Laura Sebesta. I'm Principal, Client Relationship, and Business Development Manager at FGP. And today, I'm delighted to be your moderator for a very special conversation. It's not about what's been moving the markets. It's about something more enduring: culture, mentorship, and legacy. The pillars we believe truly differentiate who we are as a firm. And today, you'll hear from 3 individuals who embody them, our distinguished research fellows. Each of these individuals has served as the lead portfolio manager for their respective asset classes, and each has successfully transitioned leadership to the next generation, an incredibly important milestone for any investment firm. But they didn't just step aside. They stayed engaged. Their continued involvement is not only a testament to their individual commitment, but to our firm's belief that mentorship and knowledge sharing don't end when you pass the baton. They deepen. And with that, it is my privilege to introduce 3 of my esteemed colleagues. John Barry, Senior Vice President and Distinguished Research Fellow, Canadian Equities. Hi, John.
Hello, Laura. What a mouthful that was.
Stephen Mitchell, Senior Vice President and Distinguished Research Fellow, Global Equities. Hi, Stephen.
Good morning.
And Robert Head, Senior Vice President and Distinguished Research Fellow, Fixed Income.
All right. Thanks, Laura. It's great to be here.
Yes, gentlemen, thank you for being here today. You've each had incredibly successful careers as lead portfolio managers. Looking back, what moments or milestones stand out the most for you? John, would you please kick it off for us?
Hi, Laura. I've been at Foyston 27 years, so trying to put it all down to 1 or 2 milestones is difficult. So I chose 4 sort of events that had an impact on me. The first was the dot-com boom. I was a young analyst. I did a report on Nortel at $13. We missed it. It went up to $120, became 37% of the index. We outperformed by 30%, lost a third of our assets, and then outperformed fabulously the next couple of years. And Foyston was born as a large asset manager.
So you underperformed when you missed it, and then subsequently outperformed
terrifically, and the assets just poured in. The second milestone was when I became a portfolio manager of the small cap fund in 2002. In another life, I was an engineer, so I had made a transition from the oil and gas business to Foyston. My goal from the time I was a teenager was to be a portfolio manager. And it was wonderful when one client trusted me with $5 million to start up a small cap fund, and I grew it to 500 and passed over the keys. And that was wonderful. The next milestone was the global financial crisis in 2008. It was shortly after I'd taken over the large cap portfolio. And, you know, it was a shocking period of time. I remember going into Jim Martin's office one day when Royal Bank was down 7% that day. It's the biggest bank in the country. And Jim basically sent me home and said, go home, look at your house. You know, I had construction at the time. You can't do anything around here. I mean, at the time, I thought the global financial system was collapsing, and it didn't. And life goes on. And after that correction, every other correction I've been through has been tame by comparison. And the final 4th milestone was the hiring of Stephen to look after our global portfolios. You know, as a member of the executive committee and as a Canadian portfolio manager, we spent an awful lot of time trying to get the global portfolios working with, we had some success, but when we finally got Stephen on board, it was wonderful. And I put 40% of my portfolio into Stephen's fund on day one, and it was one of the best investment choices I've ever made.
And just for our audience, Jim was the lead on the Canadian equity prior to yourself. That's correct?
Yes.
Yes. Okay.
And then he was a chief investment officer for a while. He was sort of my mentor for many years.
Great. Stephen, what moments or milestones stand out for you?
A lot of things similar to John, and then I'll just focus on the things that are different. I started my investment career at a startup '93. It was Burgundy was a startup at the time, and what was really terrific about it was a sink or swim, self-reliance, extraordinarily steep learning curve environment, and I loved it. It was a great environment to grow up in. And the one thing about it was if you had an idea, you could pitch it and you'd get a fun launch and you get to manage it as a result. So in 2000, Burgundy launched the European Fund, and then I ran that. And then 2004, an EFI fund, and I ran that. 2006, I was asked to transition to doing the U.S. portfolio. And 2008, I had the crazy idea that Burgundy should have a more concentrated global fund. The best companies in the world. And because I managed money in Europe and looked at Asia, looked at the US, and I thought this was really what would work. The timing of it, is to John's point, was a little auspicious. 2008 was right before the financial crisis. But that combination of quality and value really stood the test of time through that. 8 years later after that, the fund won the Institutional Investor Global Value Fund of the Year award in 2016. Subsequent to that, you always try to make the most out of a challenge. So my departure from Burgundy gave me the opportunity to relook at what I had learned, and if I could do it over again, how would I implement a global team? How would I structure it? How would I think about the research process? And John and Brian at the time, Brian is the CEO of Foyston, gave me that opportunity. Not just said, yeah, here, give it a try, but embrace what I wanted to do. I'm exceptionally proud of what the team has accomplished in the last 9 years, and Andrew O'Coin taking over management of the Global Fund a little over a year ago is really the tickery on top of all of those accomplishments. And I'm very grateful to the executive of Foyston to allow me to have done this.
Lovely. Thank you, Stephen. Rob, what moments or milestones stand out the most for you?
Okay, so these are two acts that will be hard to follow, but I will try. But similar to John, I've been with Foyston since 1998, so now into my 28th year with the firm. So a lot of memories, a lot of milestones, but one in particular that stands out is in 2005, when I was named the lead portfolio manager for the fixed income asset class. But I also very clearly remembering, not feeling nervous, feeling that I was prepared. I'd been with the company for 7 years already, and we'll talk more about the, culture and mentorship, as our interview progresses. But I do clearly remember feeling comfortable, that I was ready for the moment. And then the second would be 10 years later in 2015 with, the growth and development of the fixed income team. It became clear that there were a couple of individuals that would be, ready and able to take on more responsibility as time went on. So really the transition process began for the next generation in fixed income as far back as 2015. So I just remember having that feeling of being very comfortable and confident in the direction that the team was going, and that the next generation was certainly going to be in good hands.
Well, those are some incredibly memorable milestones that you've shared. When you think about how the investment landscape has changed over the years, what has stayed true or what has surprised you? Stephen, let's start with you.
Oh, okay. I think the first answer would be how much technology has changed the investment industry, as it has changed so many industries. The access to data, the rapid availability, that creates problems in itself. And I think what's important is to stay true to the constants within investment. So what I mean by that is when you think about equities have a positive bias. You take the underlying economic growth of any country and it's a few percent, and then you add on a survival bias for the companies that have gone public. And then you look at something like the S&P 500 that is the more concentrated survival bias aspect. So that's how you get from the 3 to like an 8% return over long periods of time. Then the other important thing is what Charlie Munger calls the eighth wonder of the world, compound interest. And if you put the two of those together, think of it as a flywheel, right? What are the two traits that you really want to perpetuate? One is this compounding and one is this rate of return. And if there's anything about investing that always holds true is don't screw up the flywheel. Don't stop the compounding. Don't do anything that would impair that. And then when we think about what we do on our global team is that's what we're focused on. Like eliminate the things that will stop that flywheel from running. I'm not surprised by a lot of things anymore. Maybe I should be, but I'm not. I'm saddened occasionally, recently, when companies make a business decision that takes over an investment decision and a business decision that prevents the flywheel from running. And to me, that's a very sad event.
Rob, I'll turn it over to you.
Well, given my experience with the fixed income market goes back to the early 90s, there's been a lot of change. Think of, and again, in the fixed income market has changed more slowly than equity markets. So, being around at a time when bonds used to trade, physically. So there would be the delivery of a physical bond. A bond would be deposited into a bank's vault. To go from that to, I remember 2007, the first electronic bond trading platform being introduced in Canada. So I do remember that being, a major development. So, so there's been a lot going on. Access to information, right? Barriers to information have come down greatly. So it is easy to be, flooded with information and flooded with ideas. But it really just makes the point, much more important that, we focus on what we know, we focus on what we do and how we've done it, with the end goal of generating, a positive, performance, on behalf of our clients.
John?
Well, the line I always told clients was investing is supposed to be like watching paint dry. It's supposed to be boring. And going back to that .com boom, all of a sudden investing became a spectator sport. And there's the proliferation of all these talking heads on television talking about investments. And I don't pay much attention to this stuff. And when I do pay attention, all they're doing is talking about the noise Stephen is trying to avoid. So that's just it makes investing tougher, although it looks easier. And the other big thing for me is just the dividend yield of the Canadian index has more than doubled. The Canadian index has more than doubled in my tenure at Foyston, which I love dividends, and that's a good thing.
Well, it's great to hear that amid all the change, there are some things that have stayed true. You are the most experienced investment professionals at the firm. You're also essentially on a rather modest retainer fee. Now, that certainly makes you the best value on our payroll. That said, what is it that keeps you energized and engaged in this next phase of your career? Rob, would you do the honors?
The easy answer is I would be doing this anyway. I truly enjoy the world of fixed income investing. I learned many years ago that it was not the most interesting subject to bring up at parties. Everybody wanted to talk about equities. So anybody's interest level in interest rates or yield curves or concepts of duration and convexity it didn't work at parties. So, but I again, truly enjoyed it. So it's what I've been doing since the early 90s. I would be doing this anyway. This allows me to remain connected to the markets. But just as importantly is to remain connected to my coworkers. I mentioned I've worked with John for almost 30 years, but there's a number of individuals at the company that I've worked with for over 20 years. And I truly enjoy their company.
John, what gets you out of bed in the morning?
Well, I mean, I don't want to repeat what Rob said, but if you like what you do, it's not a job. And I like investing. I like reading about companies. I think it's good as we get older to keep our brain fertile and stay on top of things. And these are friends in the office. These are colleagues in the office. And with technology the way it is, it's wonderful that I don't have to do the bits of the job that I didn't like going in the office and getting on airplanes, where I can work from a wonderful TV screen at home, water my plants, do other things at the same time. Life is good.
Stephen, why do you do it?
It's the same answer as everyone else. I was actually just chatting with my youngest daughter, and she was asking me how retirement's going. I said, I absolutely love it. And I explained why I was loving it. And I think the answer was a little bit different than she had thought it was going to be. And it really came down to, if you choose a career or a job that you would do for free. Because it shows that if you have passion about something, then you're going to do your best always. And I think that's the same as all of us feel that. And then for me, I've spent the last 30 some odd years looking at refining the research process, refining our errors of commission, which is you made a mistake, you analyze the mistake, you try to avoid it in the future. So you get better and better at analyzing data and figure out what it is about a person that you got wrong or about an investment case that you got wrong. And what I want to do going forward and how I think I can be helpful is just looking for errors of omission, which is the things that we didn't look at. And I think I've written about this, and it's really just that flywheel concept. If you wanted to have something that could grow at 8% for 30 years, what does it look like? What does it look like today? Like, what business model does it look like? What is its management? How would it overcome the issues that every business faces at in time? And what's its opportunity for growth over the next multiple decades? That's what I'm really excited about looking for. And then hopefully I find one, and Andrew or someone else in the team will say, hey, that's an interesting idea. Maybe we should buy it too. So that's what I'm excited about.
You're clearly all very passionate about what you do. Now, I'm interested to hear, what does mentorship look like in practice at our firm? And how do you approach working with the next generation of PMs and analysts? John, let's start with you again.
Well, I believe everybody has to develop their own investment philosophy and style internally, what's comfortable with you. So I attend all the investment meetings, and I generally stay quiet and just add information that I think is helpful to the group. I've been around for 30 years, so most of the companies we've looked at, I can tell you the last 3 or 4 or 5 CEOs and various strategies they've tried, and then a little bit of investment philosophy on the side. And the youngest analyst, recently, Ben called me up last Friday. Tom was traveling. He had a question on REITs. We ended up talking for well over an hour. And I explained to him, I never owned a REIT in the entire time I ran the portfolio. I traded real estate through Loblaws and Canadian Tire. But it was a great conversation. And over the course of the hour, we veered off REITs, and we talked about investment philosophies and how they apply to all companies.
Rob, would you care to weigh in?
Sure. Again, there will definitely be similarities, but I think we begin with the fact that the people that we work with are book smart. Like, these are smart individuals to begin with, but that means that they have to still be part of a process, and they have to learn the process. And with the smaller team that we have at FGP, everybody that worked their way up through our team, was exposed to a bit of everything. So they had a good feeling for how every part of the team operated, from the trading to the analysis to the portfolio management. And at each step of the way, every member of the team is included. So they would understand what was being done, why it was being done. And also their participation and input, was not just encouraged, it was expected. And it's an organic process. It takes place over a number of years. But when the individual has arrived, and again, like I referenced, that my second milestone was, being very comfortable in setting up the next, generation of fixed income portfolio managers.
Stephen, mentorship in practice?
I don't really have anything more to add than what Rob and John have talked about. I mean, I'm an internal resource that the others can call upon at any time, the same as I call upon them. I think we're all learning machines, and we're all curious. And so you go to where you think the best source is to solve that question. And I'm happy to be able to answer questions if called upon, but I'm also very happy to ask others as well.
Well, thank you for those insights. Now, I'd like to delve a bit further into the firm. What is it about our firm and working here specifically and the culture here that makes you want to continue contributing even after stepping back from your PM roles? Rob, would you care to take the lead?
Well, we'll come back to an answer I've given before. I like the people. Again, it's the small team environment. It's the willingness and, to share information, to encourage others to participate in the investment process. It's an overall just a positive dynamic that, again, I'd like to be a part of for years to come.
So, Rob, you mentioned people. So building on the topic of people, from your perspective, how does our firm perhaps differ from other investment managers in terms of collaboration, long-term thinking, or how we develop talent? Stephen, would you do the honors on this one?
Oh, that's kind of a core key question for me. And if you go back to, I talked about the 9 years ago and the blank sheet of paper and how you structure a research team. This is exactly how we are different. We were designed to be different. So if you think, again, go back to that flywheel analogy, what are the things that are the impediments to the flywheel that prevent it from doing that long-term continuous return? It's things like team structure that creates differences because of geography or because of sector. So we started off with everyone on our team has to be a generalist. Everyone looks at every investment decision from the perspective of how is this different than this? And so we want to get to the point where you own an idea, not that you own a sector or a country, right? And so the second thing is you also want to be that because everyone is a generalist and everyone owns their own ideas, you also want to ensure that everyone learns together. So you want to create an investment process that is iterative. So everybody has to own their wins, but also really own their mistakes. And so we embrace the fact that every time that we made a mistake, anyone made a mistake, we go into great detail about how. And it's not to blame anyone. It's to learn from it, right? So it's to make sure that the process continues to improve. That is the collaborative part. The long-term thinking is we don't want to be in a short-term valuation trap. We don't want to think about relative performance. We want to think about that long-term flywheel. How do we get it going? How do we make sure that it continues to run? How do we ensure that we aren't harming ourselves by trading out of something that is a really great idea just because it may be a little bit overvalued? Are you sure it's really overvalued? How sure are you? Right? It's getting into the essence of let the really great ideas run. Let them compound. And so we wanted to make sure that our team didn't get caught up in this relative performance trap. And that's how we're structured differently. And I think that's, your question is exactly right. It's the two things. It's being collaborative, that on a research basis, that the team grows and learns as one. It's a shared experience. And then long-term thinking, what is the long-term goal? What is it that we actually want to achieve over the next 10, 20, 30 years? That's the ultimate goal.
That's a great response. John, would you care to weigh in?
Well, I don't want to repeat what Steven said because that was great, but just when I was running the Canadian team, I mean, my particular approach was to always encourage everyone on the team to tell me what you really, really think. Don't be scared of us judging you. Don't be scared of this, a crazy idea. You know, if you don't quite got it all figured out, still present the idea. And as Rob said, we're all smart people here. And then we have these discussions, and we could, have fierce discussions, and we would disagree, and we all remain good friends. And the portfolio manager made the decision, but we had some pretty, I'm not going to say nasty arguments, but I mean real arguments where people didn't like the opinions. But somehow, if you want to figure it out, that's the sort of discussions you have to have. And the fact that we can all agree, I mean, to me, after the arguments, that's culture. So.
No, really great perspectives. Thank you. Now I'd like to look forward. You've each worked closely with the firm's research team members. What qualities or skills do you think define the next generation of great investors? Rob, would you start us off?
That is a very difficult question to answer because it really, I believe it comes down to the individual themselves. Yes. We think that it does require the time and perspective, within the FGP environment, to learn how things are done and why we do things the way we do them, that it is an organic process that I mentioned earlier. But it's something that just takes time.
John, what qualities or skills do you think define the next generation?
You just have to be very well read, very thoughtful. The key is getting the long-term trends and thinking outside of the box. Getting back to that conversation with the young analyst last week, he was saying, gee, if I only could get in and look at these two different, the renovated versus the unrenovated. And I say, well, look, you're a young guy, call up, say you want to rent it and you want to rent both and you want to look at the price to see. And he was thrilled by that idea. Maybe that's a bad example because, but it's, we're trying to get the data that's not out there and you have to work for it. So working hard for the data sometimes is a big deal as well. I remember hanging out in Targets at 7 a.m. on a Saturday with Tom, when retail was in motion.
Well, I certainly think you're talking about curiosity. I hear drive, ambition. Steven, I've heard you sort of allude to humility. What qualities and skills do you think define the next generation of great investors?
So other than drive, intelligence, passion, let's talk about ego, because it's a really important part. Too much and you're going to get into trouble. Too little and you don't take any risk. Howard Marks talked about that the only way to have significant outperformance is to be against consensus and right. It's easy to be against the consensus, but you have to be right. If you're wrong, it's terrible, right? And most people, if they don't have the right mentality, the first time they step out, and they take a contrary position and they're wrong, they step back and they say, not going to do that again. That's a risky thing. I'm going to be consensus. I'm going to go with the safe bet, because it's to be anti-consensus and wrong is career ending. But there are those who say, okay, I learned from that. I was wrong. What did I get wrong? But I'm still think that this is what I want to do. I still feel that I'm different in the way I think about things, in the way I see things. I just have to make sure that I'm right next time. And how do I make sure I'm right? And it's that person that has enough ego or drive in them that goes after that, continues to go after that, wants to be right. We'll look at all the contrary information. We'll look at the bare case of why they are wrong. Why are they stupid? Actually ask people why they think that you are so wrong and listen to them. And then if you still at the end come to the same conclusion, have the conviction to stick with it. That's what I think really makes the rare investor.
John?
Laura, I just want to say something. You said something great in there, Stephen, that I used to tell all my clients. You got to be different if you want to outperform. You can't be like everybody else.
Yes.
And that's what Stephen was talking about. And, we all want to perform, so we got to be willing to be different.
Yeah.
And that's awkward and painful and and it's nerve-wracking.
It's very painful at times.
Actually, could I add to that as well? So as Stephen was talking, I had a flashback to the global financial crisis, and again, a big component of that was mortgage related, real estate, and doing analysis on Canadian real estate related fixed income investments that were obviously not performing very well, and starting to buy them when we had very we believed we understood the downside. We did make investments. They turned out to be very good investments, but I also remember getting a lot of questions, obviously some internally, but a lot externally as well. That were we doing the right thing? So that's exactly what I was thinking about when you were speaking.
Yeah.
Really well said. What advice would you have for clients or consultants who are trying to evaluate whether a firm has a sustainable investment culture and process? Stephen, I'd love to hear your thoughts.
Okay. Let's look at the way we would look at a company. So first you look at the numbers, which they all do. Then they come in the interview, which they all do. And they try to ask the question, how are your results repeatable? And they try to delve into that, which is really a culture process question. What we do when we are analyzing companies is two things. One is that how did they do in a difficult time? How did they react? The second thing is the clarity of the message. If you listen to a company and they are talking about what they do and how they do it, there's a vast difference in companies and how they will describe it. And the really good ones can give you such clarity in the message. We do this because bum, bum, bum. And then when you talk to all the different people throughout the company, we do this because bum, bum, bum. The simplicity of the message is so easily transferred to everybody else. That's to me is how you know whether a culture is fully enveloped in that firm, that they actually get it, they live it, they breathe it. Right? That's what I would want to see that in an investment firm if I was interviewing.
Rob, what are your thoughts?
Well, again, it'll be very similar to what Stephen has been talking about. I would, maybe make a little more specific example. One thing that I learned going back to the to the late 90s at Foyston was the way we would structure a portfolio. It should be understood by, just looking at it, what the strategy is, right? So it's a, concentrated, it's clear positions, it's meaningful positions. And again, you don't need a summary, even with the fixed income portfolio, to understand what the portfolio manager's view on duration is, what his view is on credit, yield curve exposure, et cetera. And that is something we've been very consistent with, throughout the years. And that's still the way things are managed now. So it's again, the core, concentrated, clearly understood strategies.
John, what advice would you give to clients or consultants?
Just understand the strategies and meet the people and look them in the eyes and see if it's all credible.
Yeah.
And I mean, with a 2-hour interview, you can prod why you're investing in names. And if you're prepared, it becomes evident whether the people know what they're talking about and have a real thesis, or are just buying stocks that some analyst recommended earlier in the week.
Those are all great considerations for clients and consultants. I have one last question I'd like to hear from each of you on. As you look ahead, what excites you most about the future of investing and your continued role within the firm? John, take it away.
Well, currently, all three of the principal product offerings at Foyston are working, and the numbers are terrific. And looking forward, all three strategies are sort of working. When you put them together, they work together beautifully. So, I'm watching Andrew. Andrew was my trader before you, Laura, and to him running the global portfolio. I mean, this is really exciting. I mean, Andrew was a young guy when he started with us. Didn't know what he wanted to do, tried trading, and now he's a global portfolio manager. I mean, just to look at this, I don't have kids, but these are almost like my babies.
And John, earlier you mentioned that you're invested in the strategies. Are you all invested in the strategies? Yeah.
Up to my eyeballs.
All right, Rob, what excites you the most?
Oh, sorry, and just, to that, a line that we always would say to clients, we eat what we cook. So that's, been a guiding principle from the beginning. So we've all done that. But yeah, as far as the future and what excites me about it, it's the passion we talked about before. It's an industry where truly every day you come in and you don't know what's going to happen. There's something different can happen, every day, every minute that impacts markets. There's constant noise. And again, it's part of our process to eliminate, the noise from, what's truly meaningful. But it really comes down to that every day is different. You don't know what to expect. And, that's really what has been coming back.
Stephen, take it home for us.
This is a great time of life for me in so many ways. The things that I am most excited about on the investing side, one, I get to watch how great our team is doing, and that really makes me happy. Two, I have an unconstrained view now of the world and an unconstrained pursuit of the great idea, which is extraordinarily exciting. Three, I like being a learning machine, and I learn more when my mouth is closed than when I'm talking. So I like the fact, other than this, I don't have to do a lot of talking anymore, and I can just focus on learning, reading. Lastly, in that line, technology has had an extraordinary impact in terms of what you can access now, like the ability to learn about industries through an AI chat, or through blog posts, through podcasts, through the world is your oyster. If you want to understand how something looks or what the way it works, just go. Just go. The information is out there and is so terrific. That really makes me excited.
Well, thank you, John, Stephen, Rob, for sharing your insights and time with us today. And thank you to our audience for joining us. If there's one thing you take away from today's conversation, we hope it's that sustaining a great investment firm takes more than performance. It takes mentorship, shared values, and the willingness to invest in each other. Lastly, a reminder, while our quarterly webinars are a great way for us to connect with our supporters from coast to coast, they are not intended to replace our one-on-one conversations with you. We invite you to reach out to myself or another member of the client relationship team for a more in-depth discussion. Thanks again for tuning in, and we look forward to speaking with you soon.